market is highly volatile. What does this exactly mean? Volatile market means the movement in the price or movement in the index is unpredictable, and also the movement is sharp, which shows fear among the traders and investors. The reason for this is mainly because of external events like political, economical, which is leading to uncertainty. Hence, we say that the market is volatile. Now, in volatile market, it shows instability and there is also choppiness. So the prices are not stable, the market is not stable. There could be no clear trend. Now, in this market, it is difficult to trade, especially for day traders and for short-term traders, because in highly volatile market, the chances of hitting stop loss increases. So it becomes very difficult to trade, and one has to be careful while trading in this market. So how can we track? How do we know whether the market is volatile currently? The good news is you can track and you can measure, and you can even track it by looking at the graph. So let me show you. So NSE introduced India VIX, and this is the indicator India VIX, which measures the volatility in the market. So this is something which also tells us about the fear among the traders and investors, and this index is also called as fear index. Now this India VIX, it measures and we can anticipate the degree of volatility over the next 30 days in the Nifty 50 index, and it is measured in percentage. So let me show you the current VIX graph. So you can see here, this is VIX graph, and this I have taken for 5 days, and the date is 18th February. So on 18th February, the VIX index is showing 22.16. So what does this mean? Let me explain you. Whenever the VIX graph, it goes above 20, it means that the market is highly volatile. It shows fear among traders, and at this level there is risk involved. When the VIX graph goes below 20, there is low volatility, and then it shows that there is no reason to worry, no fear, and the investment is low risk investment. So currently we can see the VIX index is as 22.16. Now how to interpret this 22.16? So let me tell you, 22.16 is telling us that there could be annual or yearly fluctuation or volatility in the Nifty 50 by 22.16%, which means the Nifty can either go up or it can either fall down by 22.16% annually. Okay, so this number tells us, or it gives us the magnitude of the volatility. It does not give us the direction. Now this is the current data. Let me tell you the maximum fear the traders or investors had during the coronavirus time. Let me show you the graph for that. So you can see during coronavirus, that is when the coronavirus outbreak was there in March 2020, you can see the VIX graph had attended the level of almost more than 70. So it was I think around 70 to 80. It had gone to the 80 level. So that was the highest level which it had attended, because when the corona outbreak was there, later the government had announced lockdown throughout the country. and because of that, when VIX index rose, there was a crash in the stock market. Now let us understand how to interpret the VIX with the Nifty 50. Okay. India VIX has a strong negative correlation with Nifty 50. It means, in simple terms, when the India VIX falls, Nifty will rise and vice versa. So when the VIX rises, Nifty 50 will fall. So when there is a fear in the market, the stock market will fall down. Now remember, the VIX can even rise. It can even rise in the rising market, showing volatility. So volatility can be there in rising, in falling market, as well as in when the market is going on the upside. Now remember, again, it doesn't measure the direction. It is simply a measure of how big the price movement can be, or it shows you the magnitude of the price movement, which you can anticipate short-term uncertainty. Okay. Now this can again, I would say this can again change, because every day the volatility will change based on the news, based on the events, and yes, this can also change. So do not completely rely on this, but it is an indicator which can help you. Now let me show you Nifty 50 when there was a crash because of coronavirus. So you can see this is the Nifty 50 graph, and here you can see around end of February 2020, the market started falling down and it crashed all the way till ending March 2020. So during this period, the corona outbreak was there, and around in the month of March, there was a lockdown announced throughout the country, and so the market has fallen down, and it fell down almost 35%. So when there was a crash in the market, you can see this is the VIX index, the fear index, and you can see it had crossed 20 and it had gone up all the way till the level of 80. And gradually, when the market started moving on the upside, when the stock market or the Nifty 50 index started moving on the upside, the fear index started falling down. So from the level of 80, it came down to 70, 60, 50, and then it traded, and then it was around the level of about 20 only. So it was in the level of 20, 24, 25, 23. Okay, so it is showing that it was about 20. So you can clearly see when the market was going up, still there was a volatility because the fear index or the VIX index was still above the level of 20. Now here we understand one thing. Let me tell you, when the VIX index attains the extreme level, it gives you an opportunity, right? So when there is fear, obviously the market has fallen down a lot, there is a crash, so actually that is an opportunity for you to get into it, and that opportunity can be even for investment and not just trading. Okay, as it is said, you become greedy when everyone is fearful. So we can see when everyone was fearful during coronavirus, when the VIX index had gone up to the level of more than 60, 70, and the stock market where it bottomed out, later on the buying came in and stock market shoot up. Now let me show you some important things to remember regarding VIX. So VIX is a helpful tool and indicator, but do not solely take your decision on this, because other factors has also to be taken into consideration. In high volatile market, remember, it becomes difficult to trade. So trade cautiously and carefully. and be very stock specific. At the extreme levels, it gives you opportunity. The opportunity to either buy or to sell depending on the situation. You can track the levels and then you can decide. Because where there are buyers, they can quickly become sellers and vice versa. So I hope this video will help you to learn, to understand about the fear index and how you can use it to take your decision for trading as well as for your investment. Do like, comment and share and subscribe to my channel. Thank you.